Welcome to Global Money Talk, brought to you by Sampro TV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blaire, and joining me on set this morning is Tai Wong, who's an independent proprietary trader. Tai, good morning,
Good
and
morning,
happy
Remy.
October.
October 1st. It's the first day of the fourth quarter. It's actually a very auspicious day for our Korean viewers out there as well. October 1st, 1953 was the signing of 71 years ago, the signing of the South Korea United States Mutual Defense Treaty, which has kept the country safe for a long time. So it was a good day, an important day, and auspiciously also, in 1908, the first Model T rolled off the assembly line. It was the first sort of, really like assembly line made car, and it changed the face of, the world, really, in some ways.
Well, what a fitting open, because we saw quite a stellar performance for the equity averages the first 3 quarters of this year, and year to date the major equity averages are up double-digit percentage points. But as we kick off today's trading session, geopolitics as well as politics are front and center today. We're seeing the major stock averages open lower, so let's take a look at the major averages, starting out with the Dow Industrials. We are seeing the Dow lower by triple digits this morning, off by about half a percentage point. And the Nasdaq Composite Index is leading the way lower, with that index down by over 300 points, or 1.7%. Meanwhile, the S&P 500 is extending morning losses, off by 1%, and is down by over 60 points. So, Tai, this morning we got a mixed bag of economic data releases, but first and foremost, there are concerns about geopolitics this morning.
Well, I got on the train, I looked at the market, and what just happened, and it really coincided. I think it might have hit, the headline must have hit a minute after the equity cash opened, where the United States announced that Iran was going to imminently attack Israel with ballistic missiles. And it's a sort of a really inflammatory announcement. I don't know if it's intentional, but when we think ballistic missiles, we suddenly think, oh my goodness, it's ICBMs. I don't think it's going to be anything like that. As a matter of fact, and certainly the stocks have opened sharply lower, because the market opens, you get a headline like that, and the first instinct is to sell, whether it's machines or humans. The first instinct is to sell, and then you can see crude. Brent and WTI are both up well over 3%. Bonds are getting bought, erasing all the losses from yesterday. Gold is up higher. But if you just actually remember back, in April, Iran launched a big ballistic missile attack against Israel, and the United States and Israel basically shot down 99% of them. So, as a matter of fact, yesterday there was an announcement that the United States was increasing its personnel, pretty much Navy personnel in the area. I think we probably have two carriers in the Mediterranean that will probably be in action if Iran does carry out this threat. And it seems it shouldn't surprise, because Hamas has been hit very, very badly. Hezbollah has been hit to an extent that I think people thought would have been possible 2 or 3 weeks ago. And these are Iran's biggest client states in the area. So if they don't hit back, it makes them look weak and sort of helpless. So I think they're probably going to hit back. Question is, what happens if the Israelis and the Americans shoot down all the missiles, basically like they did in April? It'll probably be a retaliatory strike, but it'll probably be restrained. But if something gets through and a lot of civilian lives are lost, a lot of damage is done, then this could escalate relatively quickly. And I think the market's going to be very jittery until they see an attack and see what that attack brings, and if it's more like April or if it's a sort of a new stage. But it makes it for a nervous first day of the fourth quarter for the markets.
Absolutely, because when we see headlines like that across our smartphones or across the wires, then our immediate reaction is, oh my goodness, what are the implications of this? But as you mentioned, we don't know what will transpire and whether or not, as you mentioned, any attacks will have actual effect in terms of getting through. So I think this is something that we'll be closely monitoring. And Tai, as you mentioned, we are seeing oil prices skyrocket. WTI and Brent this morning up by nearly 3% on the session. But take a step back and look at what Powell said yesterday, because that's very interesting. So after the Federal Reserve's 50 basis point cut. We were waiting to hear from Powell. He spoke yesterday, and he walked back expectations of a jumbo rate cut in November, didn't he?
He very much did. He said, he was in Nashville, and he said, quote, "This is not a committee that feels like it's in a hurry to cut rates quickly. We are guided by incoming data." And it was, I think the market took a little sort of a step back and said, wow, okay, so what was that 50 basis points for? And I guess we're trying to piece together the puzzle after the fact. And it seems like, Powell might, and it's clearly he was the driver behind the 50 basis points with the story by Nick Timiraeus that we spent a lot of time on. So I think he's saying we wanted to, it's a good time to cut now, so we want to take the opportunity and get in a decent cut. But he didn't want to didn't want the market to expect that you're going to get 50 basis points, a number of them from here on in. He certainly said we could if things come in more weakly, but we might not if things come in more strongly. We may even stop. But it was a sort of a reminder that it is not on a preset course. And this morning, with all the stuff going on, it's a little hard to say. It's 60-40 in favor of a 25 basis point move in November versus a 40 basis point move. I would also add that yesterday, Michelle Bowman, who cast that dissent, had a long speech in front of the Georgia bankers. That was actually really interesting. And I want to, if we can just get graphic one today, I went in deeply, looked at what she said, and some of it's really important. And that's why I think she may be the new hawk on the Federal Reserve. Her term actually runs from, it's a 14-year term for all Fed governors, similar to the chair, though the chair position is only 4 years, renewable by the president. But her term, if she stays for the entire term, runs to 2034. She was a state bank commissioner in Kansas and has a lot of experience in government. But let's see what she says in her speech yesterday. And I highlighted some of the important bits. She talked about core inflation uncomfortably above the 2% goal. More importantly, she said, while unemployment is notably higher than a year ago, it is still at a historically low level and below my and the Congressional Budget Office's estimates of full employment. Full employment, or used to be called NAIRU, was the non-accelerating inflationary rate of unemployment, which means the rate at which, if we go below that, it's going to drive inflation because you need a certain number of workers who are unemployed to go and take the new jobs that come up. So that's important. And then the last bullet point, my estimate of the neutral rate, which is the rate of interest rates that balances the economy between sort of inflation and and unemployment, is much higher than what it was before the pandemic. Those are that's very hawkish thinking, very hawkish mentality. So I think we're going to have to keep an eye on her, but she seems to be emerging as maybe the new hawkish voice on the FOMC.
Well, I'm glad, Tai, that you broke this down for us with this graphic, because those are key points to keep our eyes on. And of course, we got mixed economic data this morning, and that is all ahead of Friday's jobs report, the non-farm payrolls, unemployment rate that we'll be watching for the latest month. And in terms of the JOLTS job opening figure, that was interesting because that was a mixed bag as well, wasn't it?
Yes. So most of the market and it's focuses on job openings, so new job openings. And that was substantially higher than expected, over 8 million job openings from, I think, 7.7 the month before, which looks great. But if you dive a little deeper in that, and it doesn't get much attention, I think equally important, if not more so, is the JOLTS quits rate. How many people have quit their jobs? And that dropped sharply from the previous month, and even though it was trending a bit lower, it dropped very substantially. And it seems, it would suggest that people are less confident of finding a new job now, so there are fewer quits. There were also fewer hires as well, even though job openings have gone up. Now, some of that happens with a lag, but you only quit your job if you're, I suppose, retiring, or you feel confident you're going to get another one. So really bears watching. Really a mixed bag, as you say. And also the ISM, the Institute of Supply Management data, came in sort of generally weaker and a little soft. Now, we can't tell how the market really is moving based on that because of what we're seeing in geopolitics. But
Mm-hmm.
it's a mixed bag. It'll set up Friday as the a very, very important day for the next Federal Reserve meeting and the future path of interest rates.
Yeah, so you mentioned what we saw in terms of the PMI manufacturing figure. We also got the S&P Global U.S. manufacturing PMI, and that also dipped slightly, and it shows continued contraction in the sector. But while we're talking about manufacturing job openings, we get non-farm payrolls at the end of the week and also ADP tomorrow. But I think speaking of labor, that strike that we've been talking about all week last week and yesterday, that fell into effect at midnight today. So we'll keep an eye on what happens there. And it's interesting to see the initial increase in terms of compensation. Wasn't it 50%? But that got rejected.
50% over 6 years wasn't good enough.
Yep.
So apparently, as we drill a little deeper into it, the port workers on the East Coast are paid a fair bit less than the port workers on the West Coast. Now, you have to factor in that on the average, living in the West Coast costs more than living on the East Coast. Obviously, in New York, we don't really feel that, but for the rest of the Atlantic coast, parts of the Gulf Coast, it's actually much more reasonable to live than it is in New York and Boston and in the Northeast. So there's a little bit of catch-up sort of required. I think they felt like it. But I think a lot of the sticking point is not just turning down 6 years and a 50% pay raise. Is amazing. They wanted 77%. But the issue I think the Maritime Alliance has is the ILA, the union, doesn't want really any automation. And apparently they walked away from negotiations back in June because they put the Maritime Alliance or the employees put in sort of automatic gates, and they didn't want that. They want they don't want any new technology. As a matter of fact, they came out in a way against containerized shipping, which makes loading and unloading a lot easier. The head of the ILA said that cost us thousands of jobs in the 70s. So it's sort of a very backwards-looking way of doing business. We're saying we don't want any technological improvements. We just want jobs. And you're really swimming against the tide on that one. So it'll be interesting to see if the president decides at some point to intervene in this. Won't happen for at least a week or two, but if the pressure builds in front of the election, that'll be an interesting sort of two-step.
Yeah, and there are a lot of moving parts to this, as you mentioned, and this fear or concern about automation reducing the number of jobs out there. Do you think that that is reasonable, or do you think now that we're in the 21st century that having automation at U.S. ports is something to be concerned about?
Well, I think if you don't have automation, you'll probably keep a few more jobs, but things become a lot less efficient, and it ends up costing the consumers more. I mean, if you look at all of us who drive, right? How great is now you don't really stop to pay at the toll booth anymore. You have Easy Pass, right? Fewer toll booth takers, but you go through a lot faster. There's a lot less traffic. There's a lot people are working more because they're not stuck in traffic. So that's a good thing, and I think you see it in all parts of our our daily living. You go to McDonald's now, there's no more 6 lines waiting to be served. You go to the kiosk, you punch in your order, and boom, it's there in 5 minutes. So fewer jobs at the front at least, but maybe the more volume is getting more jobs in the back of the shop, of the restaurant. So I think historically, innovation hasn't been bad for losing jobs. I mean, our we have 155 people working. That's a lot more people working than it was decades ago. So I think technology is here to stay. I think this is a fight that they're probably not going to win, but we'll have to see how this strike plays out.
Yeah, definitely, and we've mentioned this in previous sessions as well. With each day that passes with this strike ongoing, then it means billions of dollars for the U.S. economy. And last week when we heard from the Costco CEO on the heels of their latest earnings report, they were saying that they had been anticipating this. And here in the ports in New York City, New Jersey, they had already begun shutting down operations before midnight. I know that you mentioned you saw that there were not as many eggs on the store shelves this weekend.
You know what? Over the past few months, the eggs, sometimes you go into Costco and there are no eggs. And everybody goes, oh, no eggs. And that didn't used to happen sort of pre-pandemic. And even
Yeah.
after supply chains were sorted, that was pretty consistent. So, maybe that's just our Costco, but it may be a signal that when things people start running out of sort of essentials or things that make your life a lot better. So toilet paper again. That's going to focus the attention very, very quickly. It's interesting because labor certainly is trying to flex its muscles, and you see with Boeing. Boeing is now considering there's still September 13th was the strike. I don't think has been any movement, although there's a mediator, a federal mediator, apparently trying to bring the two sides together. But Boeing is thinking now about they have to raise money. They want to maybe do an equity raise of $10 billion. That's not a great time to do it when your stock is at the substantial lows, lows of the year. But they may have to do it just because they're running low on cash reserves, and they're trying to do whatever they can to keep the stock at investment grade, the company on investment grade.
Yeah, and looking at a company like Boeing, we know that there are a lot of things going on in terms of negotiations there, but it's costing the company millions, hundreds of millions of dollars with each passing day without a deal.
That's right. It's eventually they have, I think, almost 5,500 planes on backlog, so the money will eventually come. But at the end of the day, if anybody who's run a company, who's run a household, it's your cash flow, right? You're not making planes, you're not delivering planes, you're not getting any cash. Meanwhile, there's still a lot of people that need to be, need to get paychecks. That's why they've furloughed folks for a week, a month. The pay cut for the C-suite is not actually meaningful in terms of the larger numbers, but it looks good that the C-suite is following as well. So I think that was a smart move. But trying to conserve cash flow is pretty important when there's a strike. And also for the workers. Eventually the workers who are not getting paychecks, as we creep towards the holiday season, that matters too. So many things will come to a head, probably after the election is my guess.
And speaking of the election, this evening here in New York City at the CBS studios, we're going to get the one and most likely only vice presidential debate between Walz and J.D. Vance this evening at 9 p.m. Eastern Time. And with this ongoing strike and geopolitical concerns, I'm sure there are going to be a lot of campaign issues that are brought up between the two candidates tonight.
I wonder if it'll be interesting if this will be more of a policy debate or more of a wonky debate than the presidential debate was, based on these two, on Walz and Vance. I don't think most Americans know Walz at all. They probably couldn't pick him out of a lineup until very, very recently. If they had to, they probably never heard him speak. Apparently, he comes off apparently as a folksy Midwesterner. I've never heard him speak. He's been a very progressive governor of Minnesota. Vance has had certainly more airtime. So. I don't know if there's going to be a huge impact, but as we've mentioned before, the election is so tight that if one of them comes off as a much better person to be a heartbeat away, maybe it'll swing a few tens of thousands of votes across the country, which may be enough to make the election very, very interesting. More pressure on Vance, because I think the sense is Trump's been a little on the defensive since the past debate. He's campaigning purely in the battlefield in the swing states, which he ought to. But it's a close election. You even see that in Texas, where long-serving Senator Ted Cruz looks like he's in another dogfight for his Senate seat.
Yeah, and it's very interesting, the timing of this VP debate, because in the aftermath of the hurricane down in the southeast, there's been a lot of politicking between Harris as well as Trump. So I'm sure, given the national disaster that happened in the aftermath of the hurricane and how these two candidates address not just a policy regarding geopolitics as well as other campaign issues, but weather-related concerns that are costing millions to the U.S. economy.
Yeah, and a substantial, dramatic loss of life, too, as some of the stories have come out. Really some heartbreaking stories. I saw a headline where there was a photo of grandparents and a grandchild on a roof, apparently just before they were swept away, and really, like, you hate to see things happen. You can't imagine it happens in a country, like ours, that advanced. But sometimes, nature is nature, and you can blame it on climate change. But when it happens, it becomes very personal.
And we know when unexpected weather-related disasters hit, it costs the economy millions of dollars, and it also speaks to some of the older infrastructure in the U.S., so I am sure that that might come up in tonight's debate as well.
Yes, absolutely.
And before we wrap it up, I do want to take a look at what's coming down the pike this week. So we talked about the ADP report coming out tomorrow, the jobs report, but we do also have Fed speeches that we're keeping our eyes on. So
a tremendous number of Fed speakers, and what's great about the Federal Reserve side is they actually will give you the speech, the text of the speech, and not the Q&A, but the text of the speech, and it's typically something in there. So you generally follow them if you're not watching headlines all the time like I did when I was sitting on a trading desk. You do want to get a sense of where everybody's, get a feel for the pulse. That's why Michelle Bowman's piece was so important. It really gave you, this is what she's looking at, and we actually for the first time in a long time, there are not a lot of hawks in the FOMC. We lost, Esther George rolled off, or she retired. Loretta Mester retired. Before them, we had we had a lot. We had folks like going back many years, but Alfred Broadus, guys who were really, really hawkish. And now you're like trying to figure out where everybody is. I think Waller is a smart guy. He has a lot of respect. People look at him as sort of flexible at this stage. He hasn't really staked out a position. John Williams came from San Francisco, which typically has historically very, very sort of dovish, as you would expect, dovish Fed presidents, but he became the head of the New York Fed, and he's sort of really in the middle. So we're trying to just get a feel of how this Fed really approaches the economic data. So really appreciate seeing that Bowman speech, and she was very clear on what she cared about, which is she's worried about inflation. She's thinking about where the natural rate of employment ought to be and the neutral rate is, and the neutral rate nobody knows. I mean, Larry Fink actually was on Bloomberg TV this morning, and I wrote it down because he. Now, by the way, BlackRock they have $10 trillion of assets under management. That's sort of the amount of, as we mentioned the other day, 10 trillion in ETFs in the U.S. So they essentially have as many assets as all the ETFs. I mean, some overlap, not exactly. But he said that he thought how the market was pricing the Fed was wrong, and he goes, segments of the economy are very strong. He goes, I think the forward curve is wrong. What the government does on both sides of the government is inflationary. And finally, he says, it's really hard to see another 200 points of decline in short rates, meaning the 2-year rate is around 360, and the Fed funds is around 5. So that's already 150. He just doesn't think that, he thinks the market's getting ahead of itself, and that may dovetail in nicely with what Powell said. What he said is, we're not looking to cut it really dramatically quickly because they raised it so fast. Maybe people thought, he doesn't want people to think that we're going to drop it nearly as quickly, or at least sort of calibrate the thinking behind it. Now, I think Larry Fink, he really wants to be U.S. Treasury Secretary. He may get a shot if Harris gets in. He loved the job, but he's sort of been politically a little bit of a lightning rod. BlackRock's been sort of progressive in terms of where financial companies are, so that'll be an interesting. I mean, an interesting look on if Yellen would stay at Treasury. I mean, she's done a lot of service, so maybe I think she wants to stop and write a book, but he's potentially a Treasury candidate.
Yeah, that could be very interesting. We'll have to see how the elections play out in November.
Yes.
But Tai, as always, thank you so much for joining me. I don't want to get ahead of myself, but you mentioned inflation. So we do have CPI and PPI coming up at the end of next week. So that'll be something to look out for following the jobs report on Friday.
Every piece of data matters right now. Every piece.
Well, thank you so much, Tai. And coming up, we will be joined by Serge Bukhar, the founder and CEO of Atlas Technica, and Dan Ha of Karani Asset Management. Don't go anywhere. We'll be right back. Welcome to a Global Money Talk brought to you by SAMPRO TV, live from the New York Stock Exchange. Well, a managed service provider is a third party that manages a customer's IT infrastructure and end user systems. Small and medium-sized businesses, as well as nonprofit and government agencies, will bring on MSPs for day-to-day management services, including network management, security, and monitoring. Joining me live at the New York Stock Exchange is Dan Ha, partner at Karani Asset Management, and Dan and I will be joined by Serge Bukhar, the founder and CEO of Atlas Technica. Good morning, Dan, and good morning, Serge. Welcome to the show.
Good morning. Thank you very much for having me here.
First and foremost, let's start out. Our pleasure. Thank you so much for joining us. Well, first and foremost, let's start out by talking about Atlas Technica. Can you tell our viewing audience about your business?
Absolutely. So you've already kind of given an explanation of what an MSP does. Ultimately, we're an outsourced IT department for small to medium-sized businesses that don't want to hire a big IT staff and just want to outsource the entire function. And we specifically, Atlas Technica, are focusing on alternative investment industry. So hedge funds, private equity, family offices, and other boutique investment firms. We're fairly global. We've been in business for 8.5 years, and been growing purely through word of mouth by providing superior service.
And Serge, I think you've given our viewing audience a good idea of what your business does, but could you walk us through the types of industries as well as the size of some of these organizations that you work with?
Absolutely. Yeah. So, and maybe I'll take a kind of like step back about what MSPs are and kind of like who they are and where they are. So there's about 40,000 MSPs in the U.S. according to some old data, probably 150,000 in the world. It's a very common organization, and most small businesses and many medium-sized businesses today will outsource to an MSP like us. I think for us specifically, we focus just on alternative investments. That's our niche. Our clients anywhere between 5 to 100 users. Some slightly bigger than that, and we provide this service specifically to alternative investment firms because they want everything done in the best possible way. Usually, they want it done yesterday. And it's our job to anticipate their needs and be able to run all their systems from network to cybersecurity, desktop support, and pretty much anything in between. If somebody's TV is not working, we end up helping with that too.
And Serge, I think you've helped walk us through the size of the global marketplace when it comes to MSP businesses. So can you also give us a better idea of what your relationship with software vendors look like?
Sure, yeah. And I'll touch one more thing about the size. So I was curious myself, so I looked this up. It's about a $300 billion market that's probably going to double in the next few years because more and more businesses are outsourcing as opposed to having internal IT. Now, us as MSPs, we partner very closely with various software vendors. So we become a bridge, in essence, between our clients and all the different kind of productivity software providers like Microsoft or Google, cloud providers, which again, Microsoft, AWS, and Google, as well as cybersecurity software, and pretty much any other software you could think of. Zoom is something, Teams, Microsoft Teams is another product, that we end up being that bridge where we will select the best of breed vendors, add them to our kind of like product catalog, and then be able to set up, configure, and support those products for our clients. And so we end up, going pretty deep in, understanding what are the best cybersecurity vendors out there, what are the best communication platforms out there, whether it's Zoom, Teams, or Slack, we will also look very closely at networking hardware. So, for example, firewalls and switches and routers. So these are all the things that you need to run connectivity inside your office or inside client's office. So we look at all these different vendors, we figure out who is the best, and then we will, create partnerships with them, and then typically we will resell them to our clients. Right. So I think Microsoft said this a while ago that something like 50% of their business comes from MSPs. Don't quote me on that number, but it's a very large amount of revenue that comes from their MSP or CSP, cloud service provider model, that is basically selling on their behalf. So that's kind of like how we typically interface with all these different vendors, and constantly reevaluating them as well.
And Serge, I do want to move on to spending patterns here. So just building on what you said, give us an idea of where your clients are spending more and where they're spending less.
So I think we're always seeing a lot of focus in terms of spending on cybersecurity and cloud. And that's kind of like since we started the business about 8 years ago, that's always been increasing, right? The drive towards public cloud, the increase in cybersecurity spend has only ever gone up. It's never gone down. It's just a matter of how quickly I think that's progressing. So I think that if we look at maybe something more recent, that drive is continuing. We're seeing more and more spend in cybersecurity, and in the last probably year or two, there's been a lot of focus on artificial intelligence, things like Copilot and various other products that our clients are starting to use in their businesses. But I would say that's still in kind of nascent stages.
And you're joining us as we head into the final quarter of 2024. So I think it's a good time to take a look at spending so far this year. So based on what you see, has spending overall increased or decreased compared to last year?
I think we're definitely seeing a continuous increase. I think that what I see in the cybersecurity space is a constant race, right? It's almost like an arms race between the bad actors and the IT departments. In our case, we're the outsourced IT department, right? The bad actors are constantly coming up with new ways to, more often than not, social engineer around cybersecurity and around technology controls, as well as actually, kind of the other side of social engineering is actually be able to hack in to clients, right? And every company is trying to continuously defend against that, and to be able to defend against it, they need new and more modern solutions. They need their existing vendors to improve the technology. They need to sometimes add additional vendors, and we fulfill that function, for them. And I think that that race, if anything, is speeding up, right? And so more and more money is going towards cybersecurity. So I think that's kind of like on the one side. On the other side, you've got cloud spend, right? And I think that that is something that I wouldn't say it's speeding up. It's a continuous process where the large majority of firms that are startups have gone to public cloud, but all the other companies are still either in private cloud or on premise, having their own data centers, and it's going to take them years to move to public cloud. Eventually, they will, from my perspective, for the most part, but it's a very long process, and I think that it's a continuous process. So, small businesses are all kind of transitioned or transitioning. Medium-sized businesses are in the process of transitioning, and maybe enterprises and large businesses are still thinking about the transition, and maybe not actually moving forward yet. But you can see obviously the growth of Azure and AWS and Google Cloud in recent years, because everybody is ultimately moving to public cloud. And frankly, that was the premise under which I launched Atlas Technica, is that public cloud is the future. And 8 years ago, when I was launching, most of the firms in the investment community, investment vertical that I'm in, really were not planning to move to public cloud anytime soon. And so I think that completely changed in 8 years. Now everybody's moving. The only question is when. So in summation, I think on the public cloud side, I think the spend has been fairly kind of like continuous growth rate that we've seen in recent years.
Serge, I actually have a follow-up question about that. So would love to hear a bit more about the state of the cloud migration. It feels to me, at least, like every software these days is running on the cloud, but clearly you've mentioned that there are plenty of small, medium-sized businesses out there that are running IT on premises. So is that largely a result of legacy setup just being slow to transition? Or are there actual use cases that they see as being better run on premises than on the cloud?
That's a great question. I think it's especially a few years ago, that was $1 million question. When we were launching, people were saying like, well, public cloud doesn't make sense, or maybe public cloud is not secure. And because of that, there was a lot of doubt, I would say, in the space, and some of it was propagated by the existing businesses that didn't want to give up their business to the public cloud. I think the reality today is that it's mostly technical debt, right? It is I'd say most of the small businesses have either moved or moving, right? The medium-sized businesses is the ones where the inertia is very slow. So it takes a long time to get there. You have to change sometimes systems. You have to change software vendors. You have to sometimes change people. And I think that takes a lot of time to transition to public cloud. So in terms of, does it make sense to move to public cloud? I think that for 99% of companies, it makes sense to move to public cloud. There is the 1%, and these are either large enterprises, right? Like, I don't know, Goldman Sachs may want to, keep things private. You've got some very, very specific workloads that may not work well in public cloud. And so that's, again, a place where maybe it makes sense to do something custom. And you've got some large companies that have very significant workloads, like, for example, Netflix. I think that initially went to public cloud and then, at least moved some of the business back into their own data centers due to cost, right? Sometimes at very large scale, it can be cheaper to build your own. And then there's the AI question where, obviously Microsoft and everybody else in this, in the three big players, right? AWS, Azure, Microsoft Azure, and Google, they're all spending a huge amount of time on building their artificial intelligence capabilities. But I think that for really large players, sometimes it makes more sense to do things internally, again, due to that cost question. So again, I think for 99% of businesses, public cloud is the future. There is 1%, even though that may be a big very large entities that are in that 1% that for whom it may not make the best sense today.
Got it. And for the part of that 99% that's been slow to transition thus far, do you see the transition just happening slowly, gradually over time? Or does it go slow and then kind of suddenly happen? So is it a gradual, long, drawn out process, or is it gonna kind of be slow and then suddenly transition occurs?
Yeah, it's a interesting way of looking at it. I think it depends. I think there's certain catalysts in the space that speed up that transition, right? And the catalyst can be very different. Like there's a really famous catalyst. It was a big article in I think Wall Street Journal about Cloud Hopper. It was a cybersecurity breach where a what's called an APT, advanced persistent threat. So basically, a very significant hacking group was able to penetrate top 10 private cloud providers. So this is kind of like one step down from the AWS, Azure, Google. So people like, I think IBM was part of that. And again, this was like, I want to say 5 years ago, probably. So this hacking group was able to penetrate top 10 private cloud providers, was able to sit there for 6 months, and they weren't doing any damage. They were doing purely spying on the businesses. And they weren't just spying on the 10 businesses they hacked into. They were spying on the thousands of businesses that were hosted by those providers. And so this was an eye-opening moment, I think, for the whole industry that the small to medium-sized private cloud providers just don't have enough of a cybersecurity focus to be successful in protecting against those huge threats. And if you look at the stock of Microsoft and AWS, Amazon, around that time, it skyrocketed after that event because I think everybody started moving to public cloud because public cloud vendors, um, at least at the time, seemed to be a lot more prepared for the cybersecurity threats that we're all facing. And I think that in kind of you fast forward 5 years, there were a couple of breaches with Microsoft where some internal systems at Microsoft were compromised. But from at least from what I've heard, the client systems, right, the kind of like the back door into client systems have not hacks have not occurred at Microsoft, right? And so you look at that and you see that even today, you're going to be a lot more secure if you're using public cloud versus using smaller private cloud providers or trying to run infrastructure on your own. And I think there's actually a report that just came out from Microsoft because about 6 months ago, Satya Nadella basically said that security is going to be first for Microsoft, right? They used to be cloud first, now they're security first. And in the 6 months, they've made tremendous changes in the way that they're securing their environment and securing their clients as well. Like a couple of numbers that were like fascinating to me is that they now have 9 deputy CISOs, deputy kind of cybersecurity leaders, and they have 34,000 people working on this cybersecurity initiative that they're working on. So you look at that, and nobody else except maybe somebody like Amazon or Google can come anywhere close to that sort of maniacal focus on cybersecurity. And so I think that's a big thing why everything is moving in the direction of public cloud.
And Serge, I do want to dive deeper into cyber. So yesterday we had Dan Ives on the show, and we heard from him that large enterprise CTOs will probably never let one mega vendor manage all of their cyber. So how does this compare to small or medium-sized businesses, and what is your view on vendor consolidation in cyber?
Sure. So I think I will respect Dan, but I will respectfully disagree. I think that it depends. If you look at the JP Morgan and the Goldmans of the world, yes, they're not going to ultimately put all of their eggs in one basket, in that basket being somebody like Microsoft. Um, my some other outliers, like my previous employer was Bridgewater Associates, the largest hedge fund in the world. They're never gonna trust someone implicitly like that, um, and let a hyperscaler like Azure, AWS, or GCP, um, you know, manage their cybersecurity completely. But I think that almost everybody between, anywhere from one employee to probably 5,000 employees, they are going to be more than happy to find that one vendor that's going to solve all their issues, right? One of the biggest issues today, especially in larger firms, like medium-sized investment banks, for example, is that they have cybersecurity sprawl, right? They have too many solutions. I've known situations where they'll have 30, 40 different cybersecurity vendors in one organization. It's very difficult to manage it. It's a huge problem because you implement cybersecurity solution and then you kind of like forget about it. You're not necessarily monitoring, you're not managing it, you're not getting useful outputs out of it. I actually have a friend of mine that started a company called Runbooks specifically to help join all of those cybersecurity vendors under one umbrella because it's so difficult to manage. And so I think that um, there is definitely going to be consolidation. There's definitely lots of, firms that are not, global enterprises that are going to want to put cybersecurity in the hands of somebody like Microsoft. And I think that's why, we're seeing Microsoft invest so much into cybersecurity, into Defender, and everything else. I think that in terms of the consolidation, for the same reasons I just mentioned, larger firms don't want to have 30, 40 vendors. So they want to find one vendor and try to give them as much as possible. So, for example, whether it's Cisco or Palo Alto, right? If if a if Palo Alto can deliver on the requirements, cybersecurity requirements that would kind of check the box for 10 or 20 of those 40 vendors I mentioned previously, larger firms are going to be extremely happy to do that, right? And it's the same kind of analogy to why most smaller businesses utilize an MSP because they don't want to deal with 10, 15 different cybersecurity vendors. They want to deal with somebody like Atlas, who's going to deal with those 20 cybersecurity vendors on their behalf, right? So they ultimately just have one vendor that they need to manage as opposed to 20. And so I think that that problem of complexity is driving the consolidation in the space. And we're seeing the larger vendors um, acquire smaller businesses to supplement their portfolio of products and features. So the likes of Cisco has been buying businesses for many many years. Nowadays, I've heard a common situation with Cisco where they will actually fund a startup, sometimes from inside Cisco. Somebody wants to go launch a business. They'll give them the money to go run the business. And then once they find product market fit, they'll go and acquire it back into Cisco and add it to their portfolio. right? So they know that these smaller businesses are going to be more agile and more likely to grow quickly, and so they let them go and then they bring them back later, which I thought was a very interesting strategy. But ultimately, these larger vendors are constantly consolidating. We almost saw a huge consolidation in the space just recently, where Google tried to buy Wiz for $20 billion, and ultimately Wiz backed out. But I think that shows that these types of consolidations will continue, and I think it's very much welcomed by the clients, right? The medium size, medium to large, even size businesses, they welcome the consolidation.
Serge, let's talk about IT vendor consolidation more broadly, actually. We hear a lot about this happening in general. So not just in cybersecurity, but across a wide variety of enterprise software. So are you seeing this as well? And also, if true, are your clients consolidating gladly, if you will, or are they doing it reluctantly for cost reasons?
And we're not talking about cybersecurity. We're talking about vendors as a whole.
Right.
Yeah.
So productivity software.
Yep. Yeah, absolutely. So I think that it depends, and this is a tricky balance, right? There is lots of benefit to having one vendor, similar to what I talked about cybersecurity. So lots of companies, for example, love the fact that Microsoft can provide them email, files, communication, and another 50 different products that they can utilize. So they have everything in one big Microsoft ecosystem, and it makes it easier to support it, makes it easier to manage, easier to purchase, and in general, also from a cybersecurity perspective, it's easier to protect one vendor as opposed to 40 different vendors, right? But there is a downside to this. And the downside, and we see this all the time, the downside is when a larger player acquires a smaller boutique firm and the quality of the product slows down or degrades, right? And we see this all the time, where larger players will acquire somebody, and the quality of the service, the quality of the product immediately goes down. So I think it's something that really depends on the kind of like how well that gets integrated, right? If you look at a great example of this, I think, is Wiz. So the founders of Wiz, by the way, Wiz is a public cloud cybersecurity firm, right? They focus specifically on securing Azure, AWS, and Google Cloud. So the Wiz founders came from Microsoft, and they were at Microsoft because Microsoft acquired a cybersecurity firm, which actually became their entire drive towards Defender and that entire cybersecurity suite of products, right? So we can look at that as a very successful acquisition, where they acquired something and made it even better and bigger, and now it's spread throughout the world with millions of computers running Defender. Now, that's a good example of acquisition, but there's lots of examples which are the exact opposite, which are somebody buys a great product and runs it into the ground, right? So I think that it depends on the situation, it depends who's buying, and it depends on whether or not the service improves. And I think that if you're on the client side, if you are the client, and you have a vendor that's doing a great job for you, and suddenly they get bought, I think there's always a lot of apprehension that the service is going to fall off a cliff, the prices will increase, and the product is going to run into the ground. So it really does depend on that.
Got it. Very helpful. We obviously can't not have an IT discussion without talking about AI. Um, how close is AI for small, medium-sized businesses? This must be different for SMBs versus large enterprises that has lots and lots of IT resources. So can you tell us how close AI implementation is for SMBs? What are you seeing?
Sure. So, like, there's a huge wide divide between enterprises and everybody else, right? You've got the likes of, I think JP Morgan recently announced that they built their own AI assistant that's powered by ChatGPT, which is, or powered by OpenAI, the maker of ChatGPT. But, you know, that is something that most companies can only dream of, right? Most small businesses are going to have to rely on AI vendors to build a product for them that is going to, help with their AI needs. The medium to large size businesses, they may actually be able to, either through consulting or hiring internal teams, start to train their own models, their own LLMs. But I think that that's a very difficult and a very expensive endeavor. And the concern is always going to be that, OpenAI is going to come out with the next version of, ChatGPT that's going to make all of their internal efforts basically meaningless, right? And so they have to start from scratch. So I think it's very difficult to find, the right use cases where, medium-sized businesses can really be successful in this and not quickly be outdated. I think that it's really the SMBs, right? The smaller businesses that can, I think, buy off the shelf capability that can be very useful, right? So in our space, in the alternative investment space, there's been a number of startups, like for example, Blue Flame AI, that focuses on the needs of alternative investment firms and builds in essence, ChatGPT-like product that can help them with their specific bespoke needs. And I think in every vertical, there's going to be lots of startups like that that are ultimately going to, fulfill that requirement. I think so. From that perspective, I think the smaller firms can use off the shelf. The enterprises, have the capability of building their own. It's the medium-sized businesses that I think are going to struggle the most.
Well, Serge, thank you so much for joining us this morning. We appreciate your time and all of your insights. I think we had a great discussion, so Dan and I are really grateful. Thank you so much for joining us today.
Really appreciate the invite. Thank you very much.
Thank you. And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sanpro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thanks for joining us. Have a great day, and we'll see you here tomorrow morning.